Friday, the 13th of December. Welcome to Business Morning, live here on Channels Television. We're coming to you from our global headquarters in Lagos. Of course, the big story today is the big victory for the UK's Conservative Party, winning majority in the parliamentary elections yesterday. That's the big story. Of course, it's all the discussion around Brexit. That's what the story is. And we're trying all of that together into what the world economy and markets outlook should be for 2020. That's a big story. So we're riding that together with the trade talks, which President Donald Trump says is now in a very good gear. He says the Chinese wants the deal and the United States wants a trade deal. So we've been able to avert December 15 tariff slap on Beijing by the United States. That is in the news this morning. The global stock markets in a frenzy this morning. All the numbers looking good. The pound sterling up about 18% in early trade or overnight against the US dollar. But the Deutsche Bank is warning its clients not to chase the pound sterling. Part of the conversation we're having within the hour. But first, let's check in early morning, our conversation, our analysis and coverage of the UK elections and what it means for us here at home in Nigeria. Juliana Olayinka, my colleague at our London studios, is here. We'll discuss how the stock market is taking all of this morning. Juliana Olayinka, good morning. Hope you are able to get a bit of a rest overnight, and then we'll asking her a few questions about how did we this Conservatives parliamentary election win come through. Juliana is coming through in about a second, but let me just first introduce our guest here in the studio. Uchenna Minis is joining us from Blue FX Nigeria. He's a global market strategist and analyst at the firm. He's sitting with me here throughout the show today to get a big sense from this Brexit, the US elections next year, and what the rate will mean for most central banks around the world. Uchenna, good morning. Good morning. It's a very big day. So let's have your first word very quickly. Juliana is the one who has it all packed in for us from London. She's at the center of it all. But what's your take, this win overnight by the Conservatives? Expected?
If we want to judge from where exactly should I say, third-party observers are, it's quite shocking because we thought Labour had a sort of...
Had it all wrapped up.
Yeah, had it speaking to people's mind. But it has come to show to us that social media is not exactly what it is in terms of depicting what the general people want. And you could see the reaction from the British pound sort of highlighting that this is sort of optimistic. It's more like a twisted makeshift sort of referendum, protecting the British sovereignty. And I think that has the British pounds reacted positively on the back of that.
The stock market also took that, and the stories coming through says that, well, the FTSE 100 was also up about almost 1% already, and the mid-cap seemed to be the one lifting. So when you see the mid-cap stocks in a particular exchange moving north, that tells you, because that's where the real demography is.
Yes. So it's still highlighting what we mentioned earlier on, is that there is some sort of, should I say, short-term euphoria as to the positivity when it comes to the Conservative win, and that in itself is pushing or bolstering such bullish momentum in the British pound, and also, as you can say, in mid-cap stocks. It is, as you've warned, it's quite funny because the main issue has not been dealt with, because Britain needs to leave the EU, and the EU needs to accept the deal for Britain to leave. So
Britain wants to leave the EU by the virtue of that referendum.
Yes.
And this election was all about that Brexit. It wasn't because there was any election, but because the parliament was shut down, then it was reopened by the court, then the Queen says, okay, let's go ahead with whatever we're doing. So it's all boils down to the big story, which is Brexit here.
So what this is literally telling us is that Boris Johnson-led party is going to force its way out of the EU if the EU don't come up with a deal. In a way, I see them in the having the better, should I say, bargaining chip as to negotiating with the EU in terms of the terms that prefers that's advantage for the British economy.
What do you think the feelings will be in Brussels at the moment, this morning?
I think they're kind of short-handed, really. They really need to listen. They wouldn't be having such should I say, level of power play anymore, because now this election result is saying, well, if you're ready to deal, we will deal with you. If you're not ready, we're going to go irrespective. And Boris now has that mandate to deliver Brexit to the people.
So,
because
so
people
this election has strengthened his political hand,
Exactly.
or bargaining hands, as it were,
Yeah.
when he goes to Brussels
Yes.
in the next couple of days, as expected, and say, look, this is the elections. I've got it all on the table. We've got to leave by January 2020.
Yes, I think they have the upper hand to get this deal done or leave, irrespective.
But again, if you look at the global space, we've all been buffeted one way or the other by this Brexit conversation, by this brouhaha around whether the UK wants to leave or does not want to leave, who's going to benefit or would not benefit from it. And the markets have taken a bit of that in a stride so far in 2019. Yes or no?
Yes. So it gets to a point where when a particular risk or political or geopolitical risk is kind of lingering for that long, you get to a point where market starts to dissect that risk as it comes, and that's what we're seeing with Brexit, and that's what we're seeing with the general election. Nobody exactly know what the outcome would be, so every time there is a news, the market kind of react to it in that short-term basis.
Oh, great. So let's ask my colleague, Juliana Olayinka from our London studios this morning. Juliana, good morning.
Good morning, Bosun. You can hear me clearly.
Yes, I can. Thank you so much. So, it's been a very long night for all of you coming through to this moment. Bring us up to speed right now as we cover these UK elections out of here in Lagos, Nigeria.
Gosh, well, I'm not sure where to start, but I'll start with the headline, which is Boris Johnson, the Conservative leader, the Prime Minister of Britain, has won a resounding victory. He's got a majority that hasn't been seen since Margaret Thatcher's Conservative Party in the 1980s. He's got a majority of 79 seats. There is still one constituency left for counting, but that won't make such a difference. Labour, the left party that is led by Jeremy Corbyn, they have had a terrible night, a really terrible evening. They got 203 seats, which is the worst loss for Labour since the 1930s. There are constituencies in the north of England, in the north of this country, that completely shifted away from Labour. They had been lifelong Labour supporters. Some of these seats that Labour lost overnight had been with Labour for about 100 years. So it just goes to show that mandate, that clear mandate of getting Brexit done, has been sold to the British public. It's undeniable that for the first time since our referendum in 2016, Britain will be leaving the European Union by the end of January.
This has been a brutally contested election. You'll agree with me, because this is an election unlike any other election, at least that as far as I know, because the centerpiece, the nucleus of it is Brexit.
Well, the nucleus of it was Brexit, of course. You know, Boris Johnson wanted this election in October. It was rejected by party leaders. He said that he wanted to leave the European Union on October the 31st. Of course, he had so much opposition, not just within the other party leaders, but even within his own party. You'll remember that several of his MPs had the whip removed from them. Even after he won the mandate to get this election, several of his own MPs left because they couldn't see and they didn't understand why he was taking us into such a hard Brexit. So, of course, this is a Brexit election. Jo Swinson, she's the leader of, well, she's the former leader of the Liberal Democrats. The Liberal Democrats, the third biggest party in the UK, they were the party that said that they were going to be campaigning on a mandate of revoking Article 50. Not only did they have an abysmal night last night, Jo Swinson, the leader of the Liberal Democrats, has lost her seat. So it just goes to show you, you know, that majority of voters that voted to leave the European Union in 2016, their voices were heard last night, because even people that wanted to remain seem to have put their vote behind Boris Johnson because they just want this Brexit paralysis over and done with. And it is now.
Yes. So the whole election, so Brexit, is about the economy. It's all about the markets. It's about the social life and living of the Britishers. That's what it is all about. That's all it boils down to: breakfast, lunch, and dinner. That's what it is. So we've seen this now. So we're now on the road to January 2020 Brexit. Do you think what has all been said and done in the run-up to the December 12th, yesterday's elections, is all worth it? Britishers looking forward to January ending 2020, now that the coast is clear on the political front to get it done?
I think so. You know, Brexit it's such a long process, Bosun, and of course, at least now that it seems to be clear that we will be leaving by the end of January, that will definitely give a sigh of relief to some people. I suppose now people can get on and try and celebrate Christmas, but of course, there's still a lot more to do. At the end of January, of course, we need to now try to resolve or find a trade deal with the European Union. We also, as well, have to find a transition period. Now, the transition period at the moment is the end of December 2020. Some people are saying that's not enough. We're still waiting to hear from the big guys in Europe. So we haven't had a reaction yet from Emmanuel Macron, Angela Merkel. We've also got new Commission presidents and leaders. So it'd be interesting to see what they would say. But it seems at the moment there is a sigh of relief. The city, for example, they're definitely happy. This is the result that they wanted. The leftist mandate that Jeremy Corbyn was trying to push through was something that not only the market were unhappy with, you know, constituencies and the British public up and down the country seemed to reject. So that's why we saw the biggest surge in the pound for more than a decade. At the moment, some traders are even thinking that the pound will be pushed up at about $1.35. At the moment, it's about $1.34. The FTSE 100, that typically doesn't focus on domestic policy, that surged up this morning by about 100 points. The FTSE 250 is up by about 850 points. And we know that the mid-caps, the FTSE 250, really focuses on domestic policy. So a lot of the house builders, these small companies, well, big companies, but smaller in terms of, you know, the CEO FTSE 100 sizes, they're very, very happy because at least it feels like Britain can finally get itself out of this paralysis.
Interesting. And let me introduce you to our guest host here on the show today, Uche Naminis, who is a global markets analyst, and he's also a managing partner at BlueFX Nigeria. He's here in the studio in our global headquarters. I'm sure you want to say good morning to him.
Yes, good morning. I think I heard you earlier. Great analysis.
Yes,
nice
thank you.
Nice to hear what you've got to say.
Well, you talk about folks like you yourself will be able to at least lay back a little bit. We've got the elections out of the way. You can celebrate Christmas, which in so you think this is a very good, is it a TGIF? Is it a Thank God It's Friday for for them in the UK? And if you add that to the trade talk, I saw the tweet from President Trump this morning saying, look, there's a great deal in the horizon. We want this deal. We've averted December 15 tariff slap on, and the Chinese want the deal. We have the deal. So do you think all this coalesce together to say, well, perhaps we're going to have a bit of a soft landing for 2019?
I think so, and I think so because this creates, should I say, a very optimistic cocktail for market in terms of bullishness, as it were, as to we're having this general election for Brexit, sort of taking out that risk of having that impasse. And also there is the possibility that the trade deal is also signed off by US and China. So it's telling investors, well, nothing is holding you back. Just go in and buy up on risk, and you continue to get yield on that return. So that's where we are, really. Well,
and with where rates are right now, with the major decisions already taken for the final time in 2019 by the US Fed, the ECB, we're expecting the Bank of England, UK Central Bank, to have a meeting next week. That will be a key focus. How do you think the Bank of England members, MPC, will vote next week?
I think we're looking at the place where this election is sort of going to give a clearer airspace for the Bank of England, because they were sort of tied down in terms of what they would do going forward in terms of monetary policy. But we're expecting some sort of easing or accommodative, should I say, rhetoric from the Bank of England as regards to providing, should I say, substantial support for the markets and the economy going into 2020.
Juliana, a quick one here. How do you think, Juliana in London, how do you think British businesses and others will take this election? From Monday, everyone will sleep over this election, as it were. Take it all in, the gainers, the losers. How do you think they would move on? Businesses have been thinking whether to relocate out of London, whether they should come in. Do you think there have been enough political talk, trying to win people on all sides of the political divide? And then Monday will be the morning after. How do you think businesses in general will take this? Those who are trying to decide what will happen by next year.
Well, I think, the biggest winner at the moment, Bosun, is the FTSE 250. And again, the FTSE 250 really shows you the health of domestic business here in Britain, and the fact that that surged over 800 points just goes to show that they have definitely breathed a sigh of relief. Also, as well, the fact that the FTSE 100 generally doesn't do well when sterling goes high, and that's opened at 100 points this morning, which means that even foreign investors are perhaps looking at Britain now as a place that they can do business. We haven't had the most greatest numbers coming out this year of the economy, although we managed to skim through a recession. Things hadn't looked so good. But Boris Johnson was very clear about what he wanted to do. He already has agreed a withdrawal deal with the European Union. And so now that will pass through government, it does appear as if Brexit will be done with a deal. And that's always good for foreign investors.
In terms of how the media is playing all this up this morning, Juliana, on radio, on television in the UK, the local radio, TV stations and everyone else. How is it being reported? What's the excitement here? What are you hearing from the analysts on the ground in the UK about this election and the victory being taken away by the Conservatives?
I would say shock, really. Shock would be the biggest word. Of course, we're very quick here in the UK. The exit polls were out at 10 p.m. last night. It's only in the UK just after 9 a.m. in the morning. So people are still collating data. So people are very shocked. Boris Johnson is the all-powerful. For several years now in the UK, not only have we had two hung parliaments, we also haven't had a wide majority of this kind. So it's very surprising. Also, as well, some people are very disappointed. Even if you did believe in this whole Brexit mandate of getting Brexit done, it's very important for a government, especially a government in a powerful Western country like Britain, to have a strong opposition. And it doesn't appear as if we have that under Jeremy Corbyn. Jeremy Corbyn has said that he won't stand in the next general election, but we will have 5 years of a Conservative government. And Boris Johnson has said that he does plan on being a pretty tough right-wing leader. A lot of people in Labour-held constituencies obviously voted for him. I'm not sure they voted for him because they believe in the Tories manifesto, but they believed in their vote in the Brexit referendum. So at the moment, it's almost, I would say the whole political shake-up in Britain has completely changed. And we've gone into a sense of identity politics, which is new here, very new.
I get that. Identity politics, not necessarily because you belong to that party, but because you want Brexit out of the window and get done. So that's changing the coloration, the whole etymology, whatever it is, of the UK politics. A very interesting scenario. You need to hang around there for us, Juliana. We'll come back to you after the break. You need to fill us in a little bit more what you're hearing from the marketplace and all of that. One story that came in very quickly early this morning was from Deutsche Bank, the German big bank, one of the largest lenders in the world, telling clients, his own clients, not to chase the pound sterling. And if I want to quote what the bank says in the statement, it says, "We will be cautious in chasing any move higher in the pound and will remain neutral." He said the next focus, that's what Deutsche Bank says in this investment note, says, we're focusing on government policy of the UK, EU future economic relations, budget early next year, and the Bank of England policy meeting next year. You have a lot to scramble around for. We'll be back with you in about 2 or 3 minutes after the break. Which in a minute. Hold on a second as well. We'll get back to you on this UK elections analysis. But first, what are some of the stories making headlines here in Nigeria today? Top central bank officials and CEOs of all Nigerian banks under the Bankers Committee are holding their final meeting in Ogun State. The meeting, which is currently underway, will review review the various regulatory actions of the central bank in 2019 and discuss the December 31st, 2019 deadline for the 65% loan-to-deposit ratio, which all banks in Nigeria would have to meet. Those who failed to meet the last one got a slap on the wrist. Meantime, the new year 2020 is going to bring in something new. That's what Chapel Hill Denham is doing. The investment bank and securities trading firm announces it's set to unveil Series 6 of up to 15.5 billion naira under its NIDF 200 billion naira issuance program. The offering will be applied towards infrastructure loans approved by the Fund Managers Investment Committee. We'll take a break. We're back in 2. Okay, so let's get this conversation ongoing as we're wrapping up the year 2019. Quite a lot of big stories are still happening. The trade talks between Beijing and Washington is ready to deliver its first value. That's phase 1, which President Trump says the Chinese are keen about, and Washington is also keen about. That seemed to calm the nerves across the global market, starting from Asia overnight to this morning. And that is what you can see now if you're on the market street. Then you got a Brexit vote, overwhelming, well, at least majority of victory by the Conservatives Party. That's also there. The sterling is taking that. The London Stock Exchange is taking that to the upside. That's a lot of good news we want to deal with today. So let's bring in my guest here on the show for today, Uchenna Minis, who is a global markets analyst and a managing partner at Blue FX Nigeria. Uche, thank you so much. And of course, out of our London studios, my colleague Juliana Olanyika is also standing by for us there out of London. Juliana, a quick one to you. Do you think we're looking at a Happy New Year 2020 right now, based on what we have on our hands?
Well, it depends on which side of the coin you sit. You know, I think if you're a Conservative, if you're somebody that voted to leave, if you are a trader, then yes, it is a Happy New Year. But for many others, millions of others, then you will be particularly upset. There are even some guests that I wanted to invite onto Channels Business Global, which I'll be filming very shortly, Bosun, and they declined to come. These are Labour supporters who are absolutely so devastated with this result that they don't want to speak on TV. So Britain definitely still remains divided. Even in Boris Johnson, the Prime Minister's speech a couple of hours ago, he did say that he understands by looking at the map of the results that many of the people who voted Conservative were almost borrowing the result, that they don't believe in, you know, the rich Tory mandate, but they believe in Brexit. So yes, Happy New Year for some, not so happy for others.
Yes, but again, if you look at when you talk, your earlier comments, it's all about the opposition. But in the UK, looks like they're fragmented right now, and Brexit seems to have torn everyone apart, as it were. Jeremy Corbyn, Labour Party, seem to be asking themselves, where are we going from here? So, in terms of how does all of this come together for the people, for the ordinary man, where would they hang their economic, social, and wealth future right now? That's technically in the hands of the Conservatives. But do you think Brexit would, when it happens, whether with a deal or without a deal with Brussels, will this still be better for the ordinary man?
Well, gosh, you know, that's a billion-dollar question, Bosun. Look, you know, if we look at all the statistics and all the data that's been coming out of the UK over the past 12 months, you know, it's undeniable that they're saying in the short term, you know, there will be a shock to the British economy, and that most people will be about £6,000 a year worse off. Boris Johnson has, of course, denied that. The withdrawal agreement that he did agree with Brussels, we haven't really seen the details because, of course, everything has been so rushed. We were supposed to leave on the 31st of October. Parliament was suspended for a couple of weeks. Campaign has been going on for 6 weeks. So I suppose, you know, when it comes to January, we will see all of those details. We'll find out exactly, you know, what the plans are with Europe, whether or not we can establish a trade deal. Of course, as well, you know, not every trade deal has to come under the European Union umbrella. Britain will be having personal trade deals with the likes of France, with the likes of Germany, that are not necessarily bound by the European Union's regulations. But, the statistics say that Britons will be worse off, but only time will tell.
Time will tell. Juliana, thank you. Hanging in there a little bit. Let me ask a few questions of Uchenna here. I put out, as soon as that story came out from, that news came out of, that note came out of Deutsche Bank in Germany, and I put it out on Twitter, and I saw your response just before we started the show, and you said you agreed with Deutsche Bank that clients shouldn't chase the pound sterling, and you said there's a short-term euphoria on optimism in a twisted way as market participants saw the election, the UK election, as a mark shift referendum in favor of British sovereignty. This is your summary. This is what you think. So you believe this is not a time to chase the pound sterling, even though this rally is on the back of what happened yesterday?
Yes, because there is so much headway risk that cannot really be analyzed, should I say, or quantified in that very absolute manner for any investor to have a long-term view, or fund manager to have a long-term view as regards to...
So don't jump on the euphoria.
Yeah, don't jump on the euphoria. Except, of course, you want to have that nick in, nick out kind of move, but looking to hold portfolio for a while, that's not... You don't have any basis, as it were, to really work with that.
So what will be the key pillars for you if you're trading the FX market right now, if you're putting the sterling, the pound sterling, at the center of it all? You want to discount the elections. Would you be putting in Brexit as a more risk focus?
Yeah, so I would need to want to see what Brexit is. I would need to see what Boris Johnson has in his sleeve in terms of the EU. Is it having to sign up with a withdrawal deal, or would there be a no deal, should I say?
Or perhaps this electoral victory will give him some rethink on some aspects of the Brexit.
Very likely, because everything Ashir said, Jonah has mentioned, it was in a rush. So now it's more like we have all the cards, so we need to deal again. And they go back to EU and say, you know what, can you, with what the mandate that we have from home, can you give us this? And that has to come with the level of compromise. And I think in this place, we need to see the outcome of that before we can start looking to possibly add the British pounds in terms of a mix of portfolio.
But what else would be in your crosshairs if you're looking at the FX market? The US China trade deal. Are you confident enough on what President Trump says? The Chinese want it, we want it, let's have a great deal. One of the shortest tweets I've ever seen from Mr. President, and I read it just about one single sentence, less than 20 words or thereabout.
You know, there's something I have to say, and I know this is an unpopular opinion, but you need to give it to Trump. He really knows what he's doing, in a very weird way. And this is because...
He's a deal maker?
I can't say a deal maker. He just knows what he wants and how to get it, irrespective of how truthful that would be. Basically, all that has driven price all this year has basically been on optics and rhetorics. We were exactly at this point last year where the deal was almost done. We are still here, but the market has appreciated significantly in value, irrespective of we've not had anything signed off. Even with this deal, there is not going to be the test put out to the public. So we don't even know what is agreed on. It is just verbal agreement. The Chinese has declined to comment because...
Very strange. There's no soundbite yet from Beijing.
So it's saying that it's okay for Trump to put out anything. And
so what do you think Mr. President is working on? Is it the elections? Is he looking at how to game the entire trade talks and the trade fight, as you want to put it, with the EU, with North America, with the Mexicans or whatever, to deliver jobs numbers, to deliver stock market good numbers, and it takes all of that into next elections.
And also indirectly force the hands of the Fed too. So these things are things that he has looked at in the grand scheme of things and say, you know what, everything needs to look good going into the 2020 election. If I can achieve that, then I'm guaranteed a seat.
You think it's got a Powell locked into a corner based on the outlook, no rate cuts.
This was the Federal Reserve all going into 2018 that was so hawkish in terms of their monetary policy stance. They not only changed their outlook, they cut 3 times.
So they've been beaten. The White House has beaten the Fed.
It's going to be...
It's obvious.
It's very obvious. But no one is going to come out to publicly admit that this is the case, but this is what he's doing. He's getting every result he has promised his
So
base.
President Trump has gotten the body language, the signaling that he wants from Jeremy Powell.
Very, very correct, boss.
So right now, with this rate hold from the U.S. Fed, the course is clear for him to now look at how do I get everything worked out for me, going to the polls, going to next year elections for the U.S., and I'm saying I'm the one who's making the economy work for you Americans, and I have the templates to make it work for the global economy. Despite all of this, Uchenna, we still have these risks and vulnerabilities that begin to show. If you look at other central banks, from the Japanese to the Canadian and the Indians, it looks like rate hold is beginning to take a play, and the central banks are going under a massive pressure, asking the fiscal authorities to help them out to get the global economy working at a speed that do not slow down. I didn't like what I saw on Twitter, on research report, that say, look, the Chinese could be looking at 3%.
It's where central banks are now sort of having this sort of self-reflection to say, all these things we've been doing might not only work more, but might not be the solution. We need help from the government, and that's what it's looking like. We've had this expansion period whereby it has been so much intense bullish momentum, but just at the nick of trying to tighten quantitatively, you can see how risk started to emerge. So it's looking like we are in a very fragile state when it comes to the global health in terms of financial strength and should I say, the health of economies going forward. So it's getting to that point where Jerome Powell actually highlighted that we will do what is necessary to sustain the expansion. Right now, they are injecting close to about $500 billion into the ripple market as regards to not QE, as they call it, just to continue to provide liquidity, ample liquidity, because liquidity is drying up.
Japanese have the Bank of Japan has done so much as well. And the Chinese are doing the same.
Everybody's easing.
We are doing the same in Nigeria.
Everybody's easing. Global, we have close to 28 central banks easing. They will have to do that. So my take on this is that we might actually be in a recession, but it's been kicked along by central banks.
Okay. Don't let it hold. Roll it along.
Just rolling along.
Keep moving.
Keep moving until probably things get to align somewhere in the future. It's more like using hope as a strategy.
I'm not sure I like the sound of that. Who trade and do strategy and using hope?
It's very evident as to, you can see there are more central bank. I'm using the Federal Reserve as a reference point now, as a pivotal bank, saying that it is more like they are very reactionary rather than being proactive.
So some folks are asking around on social media and asking if the U.S. can still be depended upon as the barometer, as the anchor for global economic growth.
With what is currently going, and with what they are working to prevent from happening, if that happens or if that materializes, I think the Federal Reserve might be, should I say, demoted to the backstage, because it's going to really come up on them as to the crash down, really.
Very interesting. Let me ask thank you, Uchenna. Let me ask Juliana a few questions because she's got a show to put together today. So, Juliana, very quick one, and the last one from you on this conversation. UK elections analysis is going to be a very busy day for you there out of London. My apologies for holding you down there today. So, on a final note, if you ask around, you're having telephone conversations with your friends and families and colleagues and others in the industry and elsewhere, what are ordinary folks saying about the fate of the pound sterling and where they would like to see that? Because at the end of it all, it's all about the currency in my hand and its value at the marketplace, whether on High Street or elsewhere.
To be honest with you, Bosun, I think the ordinary Brit, they feel the squeeze in their purse, but not as much as the city. I think for most ordinary Britons, they just want to get out of this state of paralysis. I think the city, I think entrepreneurs, I think those who are making, even if it's a little bit of money selling on social media, they'll really feel this, because it has been a really difficult year for the pound, especially those of us who like to travel in the summer. It was very, very tight with the euro. You wasn't seeing just as much as you were seeing for your buck. But at the moment, of course, the pound is on a resounding high, the highest it's been in over 18 months. So if you've got those dollars or those euros stashed in the back of your drawer, now is the time, of course, to exchange them.
Great. Final question for you. Do you buy flowers?
Do I buy flowers? Usually I'm the recipient of flowers.
Great.
I don't buy flowers.
Oh, great. No, you don't. No. I might just join the list of those who give you flowers. But this story is coming through this morning that the UK imports about $3 billion worth of flowers every year from Europe, principally from the Netherlands. But with Brexit coming in January, your flowers that you receive may be coming from Kenya, homeland Africa. How does that sound to you?
Wow. Listen, I would love some flowers from Kenya. I'm not sure
Uche is having some fun,
look,
having some
we've
good
heard
laugh
this.
here.
If it's not flowers, it's bacon, it's cheese. You know, there are so many issues that we're going to be having with getting things through Dover. But most importantly, and I think what the British public care about, is their medicine, which has been on the top of the list of some of the things that will be difficult to get in.
Yes,
but,
yes,
you know,
I
as Boris
understand.
Johnson likes to say, you know, Britain is still a very strong economy. I'm sure everything will be all right in the end.
Yes, I understand that drugs and healthcare will be a major issue with this Brexit and these elections. I don't know all of that. But again, still a lot. Happy days. Thank you, Juliana Olayinka. Thank you so much. Have a great day. The next flower from me, most likely, will be with love from Nairobi in Kenya. Thank you so much. Expect it, and it's coming on or before Brexit date. I'll make sure that happens. Or let's have it after Brexit, just to get out of the way. Thank you. Have a great day. And thank you to the rest of our team out of our London studios. And have a great weekend. Of course, you guys at lunchtime, a crossover with Chimezie Obiwagu. Don't forget that, lunchtime. Thank you so much. So let's continue this conversation from here for about a minute or two with Uchenna. So if we take the global economy and outlook, what are the key issues? Talk about the central bankers. But again, if you add Brexit, the trade talks, and the U.S. elections, perhaps a few other elections around, do you think we have a perfect, as you put it, a perfect cocktail for my portfolio outlook in the new year?
Yeah, I think so. I think it's going to be central banks, government administration providing some sort of, should I say, all is wealth sort of cocktail for investors to jump in. And I think that is going to help provide investment portfolio, should I say, inflow into even the margin and frontier market space. And yeah, we might just see some sort of relief in terms of asset prices going forward into the new year. I believe. I think that's the case.
How should I play? Currencies, equities?
So I think
as just hold derivatives, hoping that whatever happens to the underlying assets, I can hold my breath and just float above that.
Yeah. So
holding a lot of futures and options.
Yeah, so I think that's going to be like you having a mixture of portfolio where you go from a bit of the high yielding assets to also the safe havens, just to counter such a risk. You can also have some melters in that mix just to help when it comes to investors shifting or rebalancing their portfolio. Yeah, you can just have a mix of this where risk is sort of, should I say, spread across board, just not to put you overtly exposed to some asset classes or some kinds of assets, really. But I think if we continue like this, we would have a 2020 that would should just give, should I say, some level of optimism in the market space.
Okay, hang around. After the break, we're holding you down throughout the show. I think we'll do a little bit more about our local marketplace when we come back. And if you look at the global FX market, I see a lot of interest these days from Nigerians who are interested in trading the global FX markets. What are the sentiments among Nigerians? Where are they looking for gains? What currencies are they playing and why? After the break. Hold it there. Uchenna. Let's take a break, everyone. We're right back in 2 minutes. Okay, let's just spend about a minute or two to check in with our marketplace, Nigerian stock market, added 0.5% on a Thursday, which is the first major gain since the week started. That's reprinting 26,569 on the all-share index, and the equity cap lulling below the 13 trillion naira level. But again, we saw a bit of a return sentiment in terms of the level of activities. So checking through the primary market data, you see that 319.6 million ordinary shares traded, the highest figure we've seen since we started the current week ending today. It is the highest we've seen, a little over 100 million shares. This was big. In naira value, that's also much bigger. And of course, in terms of number of transactions or deals. So this is a bit of a gentle showing that was playing out at the treasuries market, beginning to show a bit of hands in the equities market. The banking sector gave a major push to that yesterday, followed by consumer goods. You can see the printing on the far right under the index reading. Those are the 5 major indices we track. The insurance followed their cousins in the positive territory. Oil and gas added about 0.1%. Industrial goods took a bit of a shine from the rest of the indices, and you can see that about 0.2% in negative territory. Owando came in with about 1.33%, the only gainer on the energy, oil and gas stocks. Counters, the rest were largely unchanged. At the NSI market, that's your NESD, over-the-counter market. The index is still below the 700, reading 693.22. And the volume was just 220,933. If you consider that, take that by the size of the NESD over-the-counter, that's quite a very decent day in terms of volume. But if you finish this off with me, at FMDQ Securities Exchange, where you're seeing your open market operations, that's a single digit in terms of the naira value of what was traded yesterday. But that gives you an indication where the yields finished off, considering this level of liquidity that's coming through in the market right now. That's 11.9% for treasuries maturing 28th of February next year. This is your NTB, and hold on a second there. All of you can see your 16th January 2020 and June 2020 printing 5.5%. And that tells you that yield curve we'll talk about heading for ground zero at the treasury market is happening. And of course, just your naira bonds, the 4 most actively traded naira bonds. Let's put that aside and just bring you back to the big story around Brexit and the UK elections won by the Conservatives. This is what's coming through from the UK-British community. They're speaking right away this morning. Everyone taking the Conservatives' Prime Minister Boris Johnson's victory very nicely. So the business leaders are welcoming Boris Johnson's majority election win, hoping it will break the 3-year deadlock and pave the way for the country to leave the EU on January 31st, 2020. This is what the Director General of the Confederation of British Industry, Caroline Fairbairn, says this morning. They said early reassurance on Brexit will be vital. Firms will continue to do all they can to prepare for Brexit, but will want to know they won't face another no-deal cliff edge next year. The Director General for the UK Institute of Directors, Jonathan Geldat, says the Prime Minister must resist the urge for arbitrary negotiating deadlines and should commit to a proper adjustment period that starts when businesses know the full detail of what changes they may be facing. Our members have made clear that the content and shape of any new deal are much more important than simply the speed in getting there. Talking about Brexit. What's happening to the pound sterling? Losing steam as we speak. Where is it at the moment? Let me just check in for you. The pound is losing steam after topping 1.35 against the US dollar. Just a second, folks. I just need to get this through. This is your dollar index right now, 96.83. That's a negative 0.58% for the US dollar. The pound is doing 1.9%, still strong against the dollar, 1.34 against the greenback. Uchenna Minis, global market strategist and analyst, is still here wrapping this up for us. That's what you get in updates. We're getting updates right now on these elections analysis that, look, the British industry, businessmen, you hear that, and that seems to go what you say, look, Prime Minister Johnson needs to take this. Victory is sweet. Victory is sweet. But again, the business leaders are coming out within hours telling the Prime Minister we need to have certainty. We need to know what we're dealing with. We don't want this just done for the sake of doing the Brexit on January 31st. That goes with you. That resonates with you. What's your thoughts?
Yeah, it's also affirming what she said. She mentioned that even some of the votes, some of the votes were more like they were just tired. The Remainers votes were like they were just tired for the paralysis, and they wanted just a clear-cut direction.
So give the votes to the Conservatives,
yes,
hand it over to them, and let's just get this Brexit done and over with.
Yes, because if the Labour had come in, it would be another issue of Brexit referendum. They go through another phase of do we want to leave, do we not want to leave? But with the Conservatives, it's already put down there. We are leaving.
Technically, the devil you know than the angel that you don't know.
Exactly.
So let's just take the hand of the,
yes.
Well, technically speaking. But again, the British business leaders are asking Prime Minister to take swift, decisive action. That's giving him, the Prime Minister, a kind of a work schedule on how to speak and negotiate when he gets to Brussels.
And this is another thing just highlighting that they are actually prepared for the rough times. There's going to be a short-term chaos. There's going to be short-term rebalancing as regards to trade, should I say structuring and supply chain with EU and the UK and the rest of the world. So these executives have step out to say we are ready to go front run what of this risk, but we need to be sure if you would follow through with it.
We need certainty.
We just need certainty, and if it's fine, if you can just confirm to us that this would be the case, then we're ready to go with you all through the down period.
I think that's what business and markets want.
Yeah.
Just certainty.
Yes.
If it's going downside, fine. Let's be sure.
Yeah.
If it's going uphill, let's just be sure.
So they can plan. They can plan and know what to do, how to, should I say, front run or pile up stocks.
Out of position. Because they got to deal with employment here.
Exactly.
Folks will have to either come in or go out. They need to talk about labor. They need to talk about imports and customs tariff. They will need to deal with a lot of issues.
Yes, from
supplies.
Yes, from a corporate angle, they've been in a place of, should I say, absolute limbo. They didn't know what to do for the past 3 years.
Yes.
They were just there, just running as leaving the next day as it comes.
Because you don't know if you should stockpile raw materials or inventory, what happens if it doesn't happen? What if it happens with a deal or it happens without a deal?
Exactly.
So you're caught in the middle.
Yeah, so that's what they are trying to tell him. And I'm sure he's going to respond. And she has also mentioned that he's saying he's going to be the most effective right-wing leader, as it were. So
no, don't mind Juliana. She could be really, really acerbic when it comes to things like that. She's a Britisher, so she knows how it feels.
Right.
Let's talk about the FX market. This is... It's just playing into what Deutsche Bank said this morning. Don't chase the pound sterling. This is Conservatives' victory, telling clients, don't chase the pound sterling, be careful.
Most of all these things, and you get to realize once you play in this market long enough, you realize that there's just some group of people, the short-term guys, that would jump on any trade or any news as it were, whether it is something that's, should I say, have a long-standing benefit or not. It's just, oh, this is positive for the British pound, and let's just start buying British pound.
So you think a few folks around here could just be jumping through the window as we speak right now, throwing a few dollars into the marketplace and say, where that is good. We'll have the Conservatives, give me $100,000, $1,000 in there and putting it on this.
Yeah, that's the truth, because most of the time...
Trade the noise.
Trade the noise. It's more like, because you need to understand the market in itself is not that efficient. So a lot of people psychologically react to these things. And now when the truth or the fact are looking to certain that there is actually an issue on ground. The Brexit has not happened yet, and people are saying, "Oh well, should we just get out of this trade already?" So I think that's what we're seeing here. That's what we're seeing here. It's never the election, the result of the election here was not substantial for people to jump in to hold on to portfolio for that long. It's a short-term reaction.
That's your own advice to clients and traders or investors on this side of the divide.
Yeah. Yes, it's not substantial enough. You need to let the smoke clear so you can see what you're working with.
Let the party be over.
Yeah.
Let's see what the after party is like.
After party.
I like the after party. Again, because one major point here is that we haven't heard from Brussels at all.
Yes.
We haven't heard from the big political leaders in Europe. What's their take on these elections? If there's anything they would say before the end of today to say, okay, they welcome the victory. I'm sure that will come out of Brussels. But again, what's being said and what's not being said, to give every one of us an idea, in particular traders, currency traders and others, an idea, what's the thinking in Brussels as to what negotiations will be? Because once everybody's gone for Christmas, and what of you, everybody will take this in good stead and go home and have a nice time. But again, January 1st, 31 days, the clock is ticking.
Yeah, and another thing for Brussels now is they need to be careful, because this might create a systemic risk that might lead to the fall of the EU entirely. So
That's another one.
Yes, they need to know that they have to not be pushed to the wall, because if Britain successfully goes and get their way with it, then you're looking at another person like Greece. You're looking at other people that didn't want to be in the European Union in the first place, but are looking at the hassles and just stay there irrespective. So they have to be careful in terms of how the process goes.
So both parties in the political divorce should be very careful of what you call the unintended consequences of what will happen to Brexit January 31st, 2020. Thank you so much
for having me.
For coming here. Uchenna Menis, who is a global market strategist and a managing partner at BlueFX Nigeria. Thank you everyone for watching the program. I'll see you again on Monday, bright and early. Have a great day and see you then.